So, who the heck is Home SF? Um, for those of you who have not heard of us before, we are a coalition of the five agencies that are HUD approved, the department, excuse me, that are approved by the Department of Housing and Urban Development to do home ownership counseling. So, if you are going to use any of the city of San Francisco homebuyer assistance programs, they may require that you take homebuyer education. We're going to talk about that a little bit later on because the WISH program also does require that. These are the agencies in San Francisco who offer those classes. Asian Inc., which offers languages including Cantonese, Mandarin, and Vietnamese, as well as English services. Balance, which is our largest organization, and they actually have a national footprint with locations all over the place. The Mission Economic Development Agency, which provides services in English and Spanish. The San Francisco LGBT Community Center, which is obviously prioritizing the needs of the LGBT population and allies. And San Francisco Housing Development Corporation, which is on 3rd Street in the Bayview neighborhood of San Francisco. So these organizations together make up Home SF, and we are a basically an access point so that people can come to us for any housing question, whether it's I'm experiencing homelessness, I need help because I'm getting evicted, and including, of course, I want to buy a home. And I already own a home, but I'm having a difficult time maintaining it, or maybe fallen behind in the HOA dues or the mortgage. Any reason under the sun related to housing, you can reach out to Home SF. We do a little bit of an assessment and figure out what your needs are, and then make sure that we're connecting you with the agencies that can best serve your needs and help you to deal with whatever situation that it is that you're dealing with. My name again is Shannon Way. I am the executive director at Home SF for about another couple of weeks. But we have a fantastic team who will continue to carry the baton forward with our new executive director, Andrea Banyas. And we can all be reached at info@homesanfrancisco.com. You can also go to our website to find out information about when the workshops are taking place for all five of those agencies, and also to schedule an appointment to meet with a housing counselor individually. And then this is our main number as well. You can jot that down if you prefer to have a conversation by telephone rather than email. So, how the heck do you even get started in the home buying process? We kind of talk about the three steps of buying a home. And the reason why I kind of break it down in these three steps is because, each of these kind of lead to the other, right? And also, you're going to need a team to support you along the way. And so each step here sort of has a different person on your home buying team that is really the main contact to support you. So if you're going to be looking to buy a home, your three most integral and important relationships that you can establish will be with a housing counselor, your loan officer who will provide your mortgage loan, and then the realtor, of course, to help you find the property and make an offer. And so by breaking it up into these three steps, it is not to say that you won't work with any one person, throughout this whole process. I think all three of these team members on your side are there to support you from beginning to end and even after your purchase. But just again, kind of to let you know who is the main contact and sort of in charge of what's going to be happening within each of these given steps along the way. And so the first step, of course, is getting prepared. And the housing counselor is there to help you get prepared, which means to understand what your own needs are and where you're at in terms of getting ready. And so they will help you to establish how does owning a home fit into the picture? Does this make sense for you right now? Does it, what kind of term of a goal is this? Are you looking to buy in 6 months? Are you looking maybe 5 years from now? And what would need to be happening in order for you to get there? They can also review your credit report with you and help make sure that your credit score is as good as it can be. If you need to correct errors, you would be surprised how many people have things that is just, it's not even their debt, it's just on their credit report. And you just have to get rid of that. And it's a simple process that can improve your credit score immeasurably. Also, maybe you've had some problems in the past, or maybe you don't have any credit lines at all right now. The housing counselor can help you to establish those things, and get ready so that when you get to the lender portion, that you have that excellent credit score that's going to be required to get you the lowest down payment and the best interest rate possible. They will also help you to save for upfront costs. There are banking products that can help to give you a higher yield return. So make your money work for you, so that you can maximize the amount that you have for down payment and closing costs. There's also, depending upon your income level, there's specialty products such as match savings IDA accounts, which stands for an individual development account. That's a savings account set up for the specific purpose, sometimes for education, in this case, obviously for your down payment, where they will match 2 to 1 or sometimes more, um, for whatever dollar that you put in, to help get you to your savings goal faster. And also, they can help you kind of separate your needs from wants and think about the bigger picture. What might change for your family over time? Are you at a point where your family might be growing, or maybe, getting smaller where you would maybe downsize? How long are you planning to stay there? What is going to be, your commute? What is that going to look like, and how will you get there? These are all things that the housing counselor can work on with you so that you are very clear when you move forward, about what it is that you're looking for and really what your priorities are for buying a home. I would never say that everyone should own a home. I think that there's pros and cons to owning a home, and there's a lot of benefits, obviously, from home ownership. One being that your home is an asset. So with rent, you are paying your landlord's mortgage, but you don't necessarily gain the benefit of bringing down the principal over time. But there's a downside too, because you are taking a financial risk, and the risk is that the market might go down. And when I used to teach this class in like 2005, 2006, I would say the market might go down and people would laugh at me. But I think we all learned a lesson in 2008 that that very much can happen. And so if the market does go down, are you going to be able to continue to maintain the property and hold on to it for a few more years so that when the market comes back up, then you're able to sell? You're also going to need to make payments, and it does require more financial savvy or management, because when you own a home, you have a lot of different bills that you may not have, as a renter. And so, in addition to potentially having garbage or bills that you're not used to, you're also going to have things like property insurance. And so, you need to be sure to plan for those things, and make sure that you are disciplined on saving the amount that you're supposed to be putting away every month to be able to pay your total housing expenses. Um, and then also, for remodeling, I mean, the good news is if you want to have that orange bathroom that you've always dreamed of, being a homeowner, you can absolutely do that. That was the first thing I did when I bought my house, by the way. That's a true story. I painted the bathroom bright orange. Um, but, taste aside, not everybody loves it. But it's mine. And that's really what that represented to me, is that I don't have a landlord telling me I cannot paint my bathroom orange. So guess what? I have a bright orange bathroom. But also, as you do those types of improvements, I'm sure that some of you who have been long-term renters have had the in situation in which maybe the place that you're living is not so great and you pay your own money to like paint it or make it nicer or even carpet. I paid $2,000 to put new carpet in one house one time for my landlord to benefit later. I was a renter. I didn't get the benefits of that except that I lived there and I needed my allergies to not be a problem anymore. And so, in that situation, there may be things that you're doing that you might do anyways, that now you get to actually be the one to reap the benefit for. And if you want to do larger repairs or energy efficiency upgrades or remodel the kitchen, those are also things that you have the not only the flexibility to do, but the ability to benefit from the value of your home going up through that sweat equity. So as you're reviewing your budget, that is going to be the single most important thing that the housing counselor wants to work with you on. And there's many reasons for that. Number one, the lender is going to talk about all the things that they are looking at in terms of what they will lend you. But you are the one who will determine how much that you pay every month. Your bank person is not going to be paying your mortgage. And so you may have higher childcare costs or things that are not being accounted for in the lender's breakdown and in their ratios that they're using, but that very much are significant and can impact what you can actually afford. And if you're able to identify those things up front, then actually the lender can help you to sort of work backwards and say, okay, well, even though you pre-approved for this much, based on what you're saying that you can afford every month, the real price that you want to offer is probably going to be closer to this amount. Um, and when you have that amount, then you can start a practice that I call saving the difference. Because probably, especially if you've been renting for a really long time and have that nice rent control, low rent, your expenses will go up a bit for the purposes of being a homeowner. Now, some of that may be tax deductible, so that can be a good thing. But in the meanwhile, while you are saving money, if you are prioritizing to save the difference between what you're paying for current rent and what your future potential mortgage payment will be, you're getting to see what it's like to budget and to live on that new budget. And so not only does that help to kind of up the rate at which you're saving money, it gives you that experience of like, can I actually afford it before you're locked in and have 30 years of commitment of paying that amount moving forward. Um, and then the other thing that I do want to say about budget, and I've taught a lot of budgeting classes when I was a housing counselor. Budgeting is not a thing that you do once and then now you're done. Budgeting is a practice where you have to keep at it and keep doing it. You revisit your budget, you reconcile every month, you add up and see where you are. Are you on track? Are you off? You might need to adjust your budget every year because you have had changes in expenses or changes at your job. And so I would encourage you to think about budgeting as a muscle that you need to exercise, kind of like going to the gym. And that you need to make sure that you are budgeting regularly and seeing budgeting as a practice. It's not just a one shot snapshot. It's really supposed to be the tool that guides you all along throughout your entire life, and all the financial decisions that you make. And again, this is where the housing counselors excel. This is what they're going to want to talk to you about when you have your one-on-one individual assessment and a housing counseling appointment. Typically, that appointment is 1 to 2 hours long. We do require that or recommend strongly that you have all of the adult members who do the budgeting together attend your housing counseling session at the same time, because then you can have more robust conversations and more meaningful conversations. The housing counselors can make recommendations as far as how to repair your credit. They can help you to see, if you have too much debt, maybe a debt management plan, or a consolidation loan might be helpful. They can assess you for all kinds of housing programs, and let you know about a variety of financial tools, such as I mentioned with the IDA accounts. The other thing that the housing counselors are fantastic for is that, as I mentioned when I was talking about all the languages that they serve, sometimes even if you speak English very well, because of the fact that we're talking about financial stuff, which can be like, kind of feels like its own language sometimes, it can really be helpful to have somebody who can work with you in your native language. And so we do have a whole range of languages that are served between the five different housing counseling agencies, and Home SF would be happy to help make sure that you're connected with an agency that helps you, potentially in the language, with language support if necessary. So, we're going to take a little assessment here and check off some boxes. Have you met with a housing counselor and attended a first-time homebuyer workshop? And have you got enough money saved for your down payment and closing costs? And is your credit within the lender guidelines and you've removed all the errors? And you have a realistic budget that you're using every day to guide your financial decisions? If so, that means that you might be mortgage ready. And so that would be the point where the housing counselor will then be happy to help hand you off to a loan officer to kind of take you through the next step of the process. So, congratulations. Let's move on and talk about pre-approval. And to talk about pre-approval, we have a fantastic guest with us here today. Beatrice Mejia is a loan officer and senior lending advisor with Mechanics Bank. You can see that we have contact information for Beatrice here, and I can be happy to send this out to everybody at the end of the presentation as well. So, Beatrice, without further ado, take it away.
Thank you, Shannon. So hi everyone. Thank you for being here. And home ownership is a big step, and I'm really excited to be here with all of you. So yeah, my name is Beatrice Mejia. I'm a senior lending advisor with Mechanics Bank here in the Bay Area. I specialize in helping home buyers navigate the loan process with clarity, confidence, and just zero surprises. As Shannon mentioned earlier, buying your first home can feel sometimes a little overwhelming. There's just a lot of information out there. And sometimes it can feel like you don't know kind of where to start, right? So my role is to simplify the process, guide you step by step, and just make sure you feel informed and in control the entire time. So we'll get started. All right, so two-step, get pre-approved. So it's important to know how much you can afford before you start looking for a home. Sometimes folks get really excited and start looking at inventory without budgeting for what to look for at what price, right? So by getting pre-approved, you know your exact purchase power. You find a house within that budget. You can always, refinance in the future, but you want to get really comfortable with your monthly payment because that won't change for some time, right? So sometimes folks can get into trouble when they kind of push their budget to get a house that they wanted, but maybe can't really afford it. So there's two differences. We can discuss the pre-approval versus pre-qualification. A pre-qual is more so it's not fully underwritten, so it doesn't require full documentation package, if you will. It's more of a conversation, sort of a verbal chat. Whereas a pre-approval is fully underwritten application with full docs review. So most realtors do prefer a pre-approval because it is fully reviewed by an underwriter. It avoids any type of discrepancies. If you try to present an offer with just a pre-qualification, and let's say there's other offers with pre-approvals, the seller will probably and the agent would prefer a pre-approval client. Pre-approvals letters are good for 3 months before they require a renewal. As far as PITI, principal, interest, taxes, and insurance, It's important to calculate using, complete payment amount, HOAs, homeowners insurance, typically condos, will have that. So you want to, implement that with your current budget. Okay, so we'll go over common terms. So most people can't afford to purchase a home without, borrowing the money. Typically, home buyers will obtain a loan from a bank, credit union, or similar type of lender to help you pay for the purchase of the house. This type of loan is called a mortgage. So to obtain a mortgage, it's important to understand what lenders look for in a borrower. So we'll review some common terms. You'll hear, and so we could discuss, eventually, when you apply eventually for a mortgage. So, first one, sorry, you can zoom in just a little bit here. Okay, sorry about that. It's debt to ratio. Sorry, my screen just went a little black here. So income and income history from a lender, whether a borrower will be able to afford to repay a mortgage. Um, debt to debt to income ratio is also known as debt to income DTI. It's a percentage that tells lenders how much a person's monthly income before taxes will go towards their debt payment. Lenders prefer to loan money to people whose expenses are less than 45% of their monthly income. And we'll discuss DTI a little more in depth in this guide as well. A credit score reveals whether a person repays their debt on time. A very good or exceptional credit score indicates you're likely to make your mortgage payments, therefore, more worthy of a loan. And credit scores can range. You may qualify for a more favorable loan term as a result of a good credit score. So it does come into play with interest rates and types of programs you can qualify for. And then a down payment is generally a lump sum of cash that you use to pay for a part of your home purchase. Having enough money for a down payment shows lenders that you are committed to the purchase, and that you will likely repay a loan. Your ability to save money also shows lenders that you're capable of maintaining a safety net in case of an emergency or an unforeseen circumstance. So lenders do prefer, candidates who are low risk, meaning those who are well prepared to pay their mortgage, even if their, circumstances can change. So we'll look at how, on the next slide, we'll look at how you can prepare to be a good candidate for a loan. Okay, the 5 C's of credit. So for any type of loan, lenders generally use five criteria to determine credit worthiness, also known as the 5 C's. Knowing them can help you prepare to become a good candidate for a mortgage. So the first one's capacity, is your ability to pay your bills now in the future. If you have steady job or a profitable business, lenders will trust that you'll able to pay your bills. The capital is money or savings, investments, properties, assets, things like that, that you could sell fairly quickly for cash to pay back a loan. All, are also considered capital for a mortgage. Assets are any item that have significant monetary value. Collateral is property or other possessions of value that you can put up as security against your loan. And then the character is your history of delivering commitments. So if you, for example, pay your bills on time, you'll be considered a low risk borrower. And then the last one here is conditions. Conditions are the general circumstances of the borrower and the loan, such as like the purpose of the loan, factors that may affect your ability to repay. Similar conditions that might impact the loan in general would be conditions. So I get this often is what is a good credit score? So lenders consider your credit score when determining whether to approve a loan and how much they'll allow you to borrow. Programs like Fannie Mae usually allow like a 620 score, but once you get into the 700s, especially high 800s, you start to get certain discounts. Discounts can be things like, an auto pay discount, a credit discount, that can add up. You can potentially get like a quarter off, things like that by having exceptional credit. So your credit does have a factor in pricing and the loan programs that you could qualify for. So when you apply for a loan, your lender will ask for things like for your credit score, like Social Security number, so you can order your credit report. Your report will show your history of debts and repayments for bills such as credit cards, if you have student loans, car loans, things like that. And so this one shows the three types of bureaus, Equifax, Experian, TransUnion. For example, Mechanics Bank, we use all three and we use your middle score, whatever mid score that is. So a low number generally means that the person is considered like a higher risk. And so credit scores are determined by looking at information recorded by these three bureaus. And you can request your credit report and review for accuracy, like Shannon was mentioning. There's a couple ways to do that. You can either go through the Bureau's website directly, or the Fair Credit Report Act, the FCRA, allows you to receive a free copy as well. I think it's I believe it's once a year you can do that. And that's annualcreditreport.com, and that's where you can request your report. And it's good to look at it because you can see if there's any discrepancies, if it's accurate, if there's anything that you see that's maybe like, let's say it's a bill and you've already paid it off, you can always talk to the bureaus and request for that to be cleared up. And so that can help as well. Okay, so home buying costs. Understanding other costs associated with home buying can help you be better prepared to make all the necessary payments responsibly. So commonly discussed home buying expenses include down payment, mortgage payment, real estate taxes, homeowners insurance, but there are other costs that may not be very well known. These include other costs such as title insurance, closing costs, appraisal costs, just to name a few. So closing costs are another upfront cost of purchasing a home. This is, a large expense to save up for, and it's helpful to know these expenses, including in your closing costs as well. Well, buying costs, closing costs. So closing costs are, can be expensive above the purchase price of a home. They're paid at the end of the home buying process. So when the deal's closing, in many states, the title of the house gets transferred from the seller to the buyer. Closing costs, may include, but are not limited to some of these appraisal fees, the tax service fees, title insurance, government expenses, prepaid expenses. Those include things like taxes, homeowners insurance, interest, until your kind of first payment is due. But there is certain of these items you could potentially negotiate or I guess bargain for the seller to pay some of these costs. People commonly estimate the closing costs between 2 to 5% of the purchase of the home, but they can be more or less depending on location, the value of the home. You don't really know exactly how much the closing costs will be until your lender requests provides those detailed estimate of all the costs associated with the mortgage. So now we'll look into like other things like insurance costs that you may also want to account for, what some people call mortgage insurance. Okay, so this is called private mortgage insurance. You might hear it as MI. So some mortgages options allow you to make a down payment of less than 20% down of the home purchase. So when you put less than 20%, you will generally have to purchase what's called private mortgage insurance. The requirement varies, by lender, but we can cover some of the basics. So PMI, private mortgage insurance, is a buyer purchases private mortgage insurance to ensure that the lender will recoup the balance of the mortgage in the event the buyer ever defaults or is unable to pay on the mortgage. The cost you pay for PMI will varies depending on the size of the down payment and the size of the loan. PMI protects the lender, so it doesn't protect you per se, it protects the lender if you ever stop making payments on your loan. Um, and the reason why we require mortgage insurance is because it reduces the lender's risk. PMI enables buyers to qualify for a loan they may not qualify otherwise. So it's specific if you do less than 20% down. So, like the cost of insurance will be added to your monthly mortgage payment. So it's not like a separate line item, it's all added together. As far as the costs go, it does really vary depending on, how much you are putting down, if you're doing the minimum 3% or doing 12% or et cetera. But the good news is you can't get rid of it once you have 20% equity in your home. So that means you own 80% or less of the home's value. You may be able to cancel PMI, and that will reduce your monthly payments. So it's not something you have to carry on forever per se. You can get rid of it eventually through either a refinance or once your equity reaches that level. So types of loans, there's a lot of types of loans, so we'll cover just a few today. So when we think about a mortgage, we kind of imagine a conventional loan that we can get, from the bank. But there are also other types of loans, and we'll go over some differences. So the first one, we'll go over conventional. Yeah, I see at the top here. Conventional loans typically they're offered by the banks, credit unions, again, mortgage companies. Requirements can vary depending on the lender and your credit worthiness, including the credit score, and your debt to income ratio, your DTI. There's also government-backed loans. These are loans that are guaranteed by government agencies for buyers who may not have potentially maybe good credit history or enough money for a down payment. Some of those examples are the Federal Housing Administration, the FHA, helps insure loans through private lenders to borrowers who have low credit scores or limited funds for a down payment. We also have the Department of Veterans, the VA, loans for eligible veterans, service members, surviving spouses. The VA can guarantee a portion of a loan from a private lender. And then we do also have the USDA, so the U.S. Department of Agriculture. For those looking to buy a home in a rural area, the USDA offers several types of loan assistance for direct loans and guaranteed loan programs. The USDA is typically targeted to low and moderate income individuals. These are just a handful of programs. There's quite a few out there, but these are some really common types of loans. So how much down payment, right? We get this question a lot. How much do we need to save? So most buyers use a mortgage, to purchase their home, right? They use their own money to pay for a portion of the price of the home, and then they borrow the rest from a bank, from a lender. So a down payment is, an initial payment towards the purchase of a home. And it's typically between 3%, 20%. You could go more than 20%. If you want a smaller monthly payment or mortgage payment. Your savings, loan size, credit score will determine the actual, amount and factors into what you could qualify for. In general, the larger you do on your down payment, the lower your monthly mortgage payments will probably be. But this is typically the range of how low we can go is from 3%, which would be like a FHA, Freddie Mac type loan, Fannie Mae, into a conventional 20% or more. Homebuyer assistance. So this is the fun part here. The FHLB has announced. So we announced on 2026 we have a oh, I'm sorry. This is, I think, a slide before. Homebuyer assistance. So state, city, or lender programs may be available to assist with down payment or your home purchase. Household income limits, other requirements will apply. So some banks like Mechanics Bank, we have grants, different kinds of grants that can assist for non-recurring closing costs, down payment up to, a specific dollar amount. So that's what we'll cover next here. Program. Sorry, give me 1 second. Just get there. Okay, here we go. So which program? 4-to-1 matching ratio available through participating banks. So this we are a participating bank of the WISH program, matching grant to help first-time home buyers with upfront costs, local, state, federal programs. And so to talk a little bit about that, we have a 4-to-1 matching grant up to 32,800 for home down payment assistance and closing costs. Eligible grant recipients are for first-time home buyers with household incomes at or below 80% of the HUD area median income. Home buyer contributions can include savings from individual development accounts, program savings, gift funds, so like a gift donor as well. And then in 2026, so this year we allocated 13 million for the WISH program. Mechanics Bank, as a participant member, can request grant funds on a first come, first serve. So to assist home buyers who are expected to close or be in escrow before March of next year. So essentially, we don't guarantee the funds until you are in contract, and it is a first come first serve type of thing. Once we run out of funds, then we wait until the next year. And so to cover some of these highlights here, San Francisco, so here, grant type. So we talked about the participants. So we want to make sure home is, sustainable and affordable. The max debt to income, on the front end is 43%, on the back end is 47%. So it's just slightly lower requirement for versus like our Fannie Mae guidelines. So when we're compensating factors, there, such as 6 months reserves, typically we want to see good credit history. New housing expense is less than the current rent payment and stable employment. So here they talk a little bit about on these grids, the 4-to-1 match in 2026. You do have to be a first-time home buyer, not have owned a home in the last 3 years. There is some requirements as well. And then there's the grant terms, 5-year retention period waived after you've lived it in at least, 5 years. Otherwise, typically when you refinance or you sell your home, if it's been less than that term, that's when you would repay that back. Okay, so qualifying criteria. So that's kind of similar. First time home buyer, you got to have income eligibility, so working history. It must be a primary residence. Housing to income ratio. There is a home buyer education class requirement that you can take online to get a certificate. And then there's the use of funds for, cash to close, down payment, things like that you could use it for down payment and as well closing costs. So this has property eligibility, must be located in a CRA assessment area, counties with Mechanics Bank, branch location, or Sacramento County. Maybe a single family home, condo, or townhome. And then it talks a little bit about the flood insurance, must obtain flood insurance if the property is determined to be in a flood zone, if that's where it is.
Hey, Chris.
Yes.
The on that slide, it can also be a single family residence that's a 1-to-4 or a duplex.
Oh,
It's just
perfect.
we would just have to count the gross income of those other units as part of the income qualification.
Perfect. Yeah, thank you. Thank you, Leona. So yeah, for the single family, it could be a 1 unit, but we can go up to a 4 unit property.
Mm-hmm.
So 1 of 4 units. Thank you. And by the way, I want to introduce Leona. She's our CRA officer. So Community Reinvestment Act, that's what CRA stands for. And she refers to loans made, for example, lending refers to loans made by federal insured banks to help meet the credit needs of the community.
Mm-hmm.
Specifically like low to moderate neighborhoods. So thank you, Leona, for joining us. She's the WISH expert.
Thank you.
Thank you. And then we talked about, let's see. I think we're good on that one. Okay. So income eligibility, so this can determine, this is some, it says San Francisco, so it is depending on location, right, and how it's calculated. But it talks about a little bit about size of household, the 80% AMI, and that income limitations or guidelines. It's not, it's depending on the neighborhood, where you're looking to buy. It could be, these numbers can be different. But this is a good indicator of where household and income limitations would be for eligibility. Okay, so let's see. Helpful reminders for Wish. Funds reservation. So again, first come, first served, valid for 60 days. Household must be income qualified, enrolled, and in contract. All adults, household members, and income must be included. For income eligibility, there's an address. So you're in contract, you have an address, not purchase property address. And then it talks a little bit about cash back and what we cannot exceed. Consumer debt cannot be paid through escrow.
Yeah, and then Beatrice also on that is with the WISH program, there's multiple banks that participate with Federal Home Loan Bank. If you want to do the WISH program with Mechanics Bank, you would have to have a first mortgage through Mechanics Bank. But there's multiple lenders that work with Federal Home Loan Bank on the WISH program.
Right, yeah. We're not the only institution. There's multiples. Yeah. Thank you, Leona. Okay, so this talks a little bit about the documentation. This is just a small list. There's a little bit more than just this. But typically for a wish application list, you got to have, first pay stub, 3 consecutive concurrent pay stubs, your most recent tax returns, um, things like if you're having dividend incomes, things like that, all income earning assets. So bank statements, if you're self-employed, 2 years tax returns, possibly a P&L statement, most recent W-2s. There is also a household income qualification, like worksheet, homeowners, I think it's called the AHP, right? Household income qualification. Homeowners worksheet certificate. That's the one you go online. You can get that pretty easily.
We actually do it.
Oh, you do?
Yeah, so the homeowners don't complete that worksheet.
Oh, yeah, the worksheet. I mean the certificate that you gotta the first time home buyer
Oh
certificate, the
yes,
counseling.
through
Yeah,
yeah.
that part. Sorry. And then yeah, if you have W-2s, I think I covered that already. W-2s with your tax return. So it's a full documentation, packet that we would require and to make sure you qualify and then things like that. Pre-approval letter. So recent pre-approval letter to accompany your purchase, offer to demonstrate your ability to purchase. So that's really where we start is with a pre-approval, right? With the whole process. Existing pre-approval can be updated. So if let's say you got pre-approved and it's expired, you can renew it. You would notify us about any changes, and then we can update or perform a new pre-approval application renewal. In a rising interest rate environment during the home search, you will need to check in with your lender. So what this means is, we can quote you a rate, a program available, but we can't lock your interest rate until you're in contract. And then we can discuss the different programs that would fit, the different rates. And then any changes will impact your pre-approval. So, don't go buying a new car last minute. Try to keep your liabilities low, pay off any debt that you may have. That would increase your chances of a higher pre-approval, but also keeping your debt to income smaller, making sure that you're within the WISH DTI guidelines, also the first mortgage guidelines, so avoids any kind of surprises, or you're looking to change jobs, make sure it's within the same maybe type of work. It's happened before where people, will get a new vehicle last week before they're supposed to close, and that kind of stresses me out. Or they're looking to change jobs, it want to keep within the same type of line of work, right? It's easier it's usually a 2-year history there. Let's see. So free resources. So it just has the Truth in Lending Act requires the buyers to be given information about the key features, costs, risk, things like that. So we do provide disclosures when you do an application, and also a loan estimate. So you get to see, the full picture really of, what you're getting, what you might qualify for. So these are called disclosures, but we also give you closing disclosures when we're getting ready to wrap the loan up for you. Consumer Financial Bureau provides protection and resources for buying when financing a home. And then it has other links there. The U.S. Department of Housing and Urban Development for housing equal opportunity for all, information about the rights, home buying programs, and then there's finding a home and sites like that. But that's what a good realtor will do for you, is try to assist you with that as well. And that back to you, Shannon.
Thank you so much, Beatrice. I really appreciate that. Just a few things that I will say really quickly about the Wish. Um, First of all, the match fund is very cool because you save up $8,000, but now you magically have $40,000. And so that goes a long way towards bringing down that down payment and the closing costs. But the other thing that's very cool about the Wish is that, very much unlike a lot of assistance programs that don't work with each other, like you can only do this, the Wish is very flexible. And so if you get down payment assistance through the city, if you get grant assistance through your lender, a lot of those things, they can all be stacked up. And so then that's again bringing that down payment down, getting you closer to that 20%, helping you to avoid mortgage insurance. And with the Wish, unlike a lot of these programs where they are loans and then when you sell or refinance, you have to pay that off. With the Wish, after 5 years, that 32,600, whatever the amount is waived, whatever they've given you. So you don't have to pay that back. It's literally free money. Again, as long as you live in the house for 5 years and maintain it as your principal residence. And so such a cool program. Thank you so much, Beatrice, for sharing information about that. Um, and now we get to go to the fun part, which is finding a property. Now, Beatrice said at the beginning, get your approval first, right? Because honestly, looking at houses is so fun, and I still do it all the time anyways. I go to open houses just for fun. But everybody wants to jump ahead. That's totally normal to just say, like, hey, I want to get out there and start looking at properties. The problem is that is a recipe for heartbreak because if you see a house that you can't afford, I guarantee you're going to love it. And then you're going to be like comparing every other property that you can afford against something that you never could afford. And so it's just a recipe for disappointment and to push yourself to a point of like what might be beyond your financial reality. And so to avoid that, it is so important to get the pre-approval first because otherwise you're just going to be looking at properties that you cannot buy anyways because no realtor is going to accept an offer in this market in this Bay Area if you do not have that pre-approval. So the chances of going through all of that and getting all your documents together, to make an offer on a Tuesday for a house you saw at an open house on Sunday, that's just not reasonable. It's not going to happen. And so again, we're trying to help you avoid some heartbreak here. Um, and when you do go to look, you're going to want a realtor to help you. And most good realtors are not even going to let you in their car unless you have that pre-approval letter. They know that it's wasting your time and theirs to go out looking for properties. So frankly, it's going to be pretty common that if you start talking to a realtor that they're going to want to see your pre-approval first and foremost before they want to show you any property. And that's why they want to save you from the pain of potentially, getting into a bad situation or getting your heart set on something. Um, Starting this year, there is now a new requirement around buyer broker agreements. So, when you go to work with a realtor, in order for them to be able to make an offer, they need to do a disclosure for you and make sure that everybody's clear and on the up and up about who is representing who in the transaction. And so they're going to ask you to sign a buyer broker agreement. That used to be optional. Now it is required starting in 2026. There's two different kinds of buyer broker agreements out there. One of them would be an exclusive contract. So that says, I agree I'm going to work with this realtor for the next 3 months to try to buy a house, and any property that I buy, within that 3 month period, I'm going to work with them as my realtor. And then the other kind would be a non-exclusive contract. And so what that says is, I, as the realtor, am writing the offer for this one property. And if you buy this property, I'm your realtor. But if you buy another property, our relationship is non-exclusive. You can work with another realtor on that. Um, and honestly, it is the mark of a good realtor that they're going to want you to have an exclusive contract. So just be prepared for that. What I like to tell people is shop around, talk to a few different realtors. We recommend at least 3 different realtors, not because of some realtors are bad, but because different realtors actually have different targets and different specialties and different areas that they might be in. And so it's not about good and bad realtors, it's about finding the realtor who really works for you. So do your dating, right? Talk to some different realtors. And then when you find the one and like, this is the person who is explaining things in a way that I understand, I feel like this realtor knows what they're doing and I really want to work with them, then that's when you get married, right? So then that's when you would potentially do an exclusive contract. And what that ensures is that you actually have a realtor who is 100% working for you. I do see a lot of people who try to have a bunch of non-exclusive contracts and sort of say like, oh, I'm going to work with 3 different realtors, and that means 3 different realtors are looking out for me. But the reality is, if they don't have an exclusive contract, they're probably not looking out for you. They're going to put their exclusive contract clients first. And then maybe if something comes up that, they think of you, they'll notify you, right? So don't jump in and get married before you're ready. Definitely talk to some folks and just be really clear that this is where I'm at. I'm just interviewing people right now. Yes, I know I want to have an exclusive relationship in the future, but right now I'm just kicking some tires. I'm just going on a couple of dates with some realtors, if you so to speak, to talk to them, to ask them questions, to have a little interview with them. That allows the realtor to prioritize their time appropriately, because the reality is realtors are paid on commission and they're going to assume that you're their forever client just because they want that if you don't say otherwise. And so the way to manage that is really to just have clear communication and be really upfront about where you are in the process. And then the realtor can adjust accordingly and, decide, how much of their time that they're willing to commit based upon the nature of your relationship. So listen, you're going to go out there and you're going to make a bunch of offers. And your first offer probably will not get accepted. It might. Good luck to you. We really hope it does. But the reality is there's a lot of competition, and depending upon, what type of house you're looking for, whether, what location or neighborhood, there's probably going to be multiple offers. And having a good realtor is part of the key to getting your offer accepted, because that realtor has the opportunity to go in front of the seller's realtor and to tell them why you're a good client and say, look, we have this wonderful pre-approval with, a top-notch realtor who's very well known and reputable in the area. My clients are a cute little family, or whatever it is that they want to say about you to, encourage people to work with you. And actually having a wish loan or down payment assistance can sometimes be a benefit too, because that allows the realtor to be able to say, hey, look, this person is required to live in this as their principal residence. And so that house where you raised your kids and, have loved and lived in for 30, 40, 50 years, wouldn't you like that to go to somebody else who you know is going to also live there and be a part of the city and be a part of all the exciting things that's happening, not just some investor? And so that can go a long way. When I was a realtor, I definitely had offers that got accepted for that reason. The realtor's job is to help you to number one, see properties, know what's out there, understand the market, and then number two, to make that offer. So they'll sit down with you to actually write up the purchase contract and send that over to the sellers. That will be presented along with that pre-approval letter, as well as an earnest money deposit. The earnest money deposit is typically the money that just opens the escrow account. It is the money that is typically 1 to 3%. There's not an amount set. It's sort of like however much you and the realtor decide based on the competition level. And obviously, the more money that you put down as your deposit, then the more desirable that your offer may be. But that will be money that gets cashed at the beginning of the escrow process. And then the rest of the money, the down payment, the closing costs, all the other things that Beatrice was talking about, you would bring in at the end. What the heck is an escrow? Well, in common sense, it is the third party transition that like basically transfers everything. So, you could be in a situation where the a buyer, you as the buyer, you're like, well, I need to sign over the the loan and transfer the money and give my deposit and all these things, but I need the title. So you give me the keys and the title and I'll give you the money. How do you do that? How do you change hands? So enter on the scene a title company. When your offer is accepted, the realtors, the buyer's realtor and the seller's realtor will open this escrow account at a title company. And their job is to be neutral. And it's a sort of receptacle account that you can put your money into and deposit the loan over to. And the seller, they'll check the seller's records and make sure that they actually own the property and that they have the ability to sell it unencumbered, which means free from any other like remaining liens, and that any other claims on the title have been all cleared. And then as long as both agents are telling that title company the same thing, then you proceed forward and you move ahead with this escrow process for a period of 30 to 60 days. Could be a little longer, could be a little shorter, depending on your personal transaction. But typically, that is how long it takes. And as long as everybody's telling them the same thing, we move forward. But if for some reason they're not saying the same thing, maybe the buyer's agent is saying this and the seller's agent is saying this, the title company's job is not to interpret the contract. They're not allowed to say, well, this is what we think it means. Their job is to just say, okay, you guys are clearly not in alignment. Go back to your corners, figure out what the heck you think is happening here, and come back when you can tell me the same thing. And so then that's how you proceed forward. And then again, at the close of escrow, the title company will also not only calculate this is how much you need to bring in to close, but they'll serve as a notary public and make sure that all the legal stamps and I's are dotted and T's are crossed, so that at the close of escrow, you get your keys and everybody is, clear slate, clean table, the seller gets their money, and the seller's debts are cleared. You are able to, be able to then now own your home with a proper title, and have the confidence and the solidity that this is your home for sure, for surezies. So when you're interviewing, again, this is that dating phase. As I mentioned, you want to talk to probably 3 or more agents. The other thing that I think is really cool about talking to multiple realtors is that it also gives you a chance to have your learning curve, because the first time you talk to an agent, you have no comparison. You're like, you don't know if they're great or not. It's just a gut instinct. And then you talk to the second person and you're comparing them to that first person. By the time you talk to the third person, now you have cultivated a level of understanding that you're actually getting what is happening here. You understand what they're talking about and you have a better basis of comparison. But I would say you want to compare apples to apples. So, throughout this process, you may have, hearsay, oh, you should ask the realtor about that, or that's a question for your realtor. Start a little notebook and write those things down. And then that way, when you get to where you're ready to start interviewing realtors, you already have some questions to start with, and you can make sure that you're asking the same questions over and over again when you talk to different people. We already talked about the exclusive relationship, so I won't go so much into that. But I will say that, how to find a realtor is a biggest question that I get. And especially for sometimes with low and moderate income households where, we have modest means. We don't have, 2 million, 3 million plus to spend on a house. And so, there are people who have unfortunately had the experience of calling realtors that don't even call them back. But I will tell you that there are also realtors out there who love first-time home buyers. When I was a realtor, that's what I specialized in, and I would go above and beyond for my first-timers because, you get so excited when you buy your house and it finally is able to happen. I know that you're going to tell all your friends and family I'm the best realtor in the whole wide world and send me a bunch of business. And so, I never had to do any marketing because I specialized with first-time home buyers who literally kept me in business by just being happy. And so, definitely keep searching. You can always reach out to Home SF, but also you can talk to your lender because your lender probably knows hundreds of realtors and they can give you a sense of who might be a good fit for you. And you might also talk to other homeowners that you know and ask them who they worked with. There's listservs, there's all sorts of things that you can do, but again, make sure that you're not just taking people at their face value and then just signing up immediately for an exclusive relationship. You want to interview them first and really get a sense of, is this going to be the right person for me? Like, do I want to get married to this realtor, at least for the purposes of the next 6 months or however long it may be until I close escrow on my house? Because if you don't like that person when you first interview them, honey, that's the honeymoon period. It's not getting any better. It's just things are downhill when they start asking you to write $30,000 checks. So make sure that you love your realtor and that you love your lender because these are the folks that are going to be on your team and they're going to help you out through this process and they're going to be kind of your BFFs. But also your mentors, your, guidance that throughout this process. Um, Moving on to different things that you might want to think about when you're working with a realtor. So, number one, if you are looking at a new construction project, if this is a brand new development, when you go to that first open house, you need to bring your realtor. Otherwise, that new construction project is probably going to cut your realtor out of the deal and say you can't work with them. So, they need to come with you to the first open house, the first time that you register at the new sales office in order for you to preserve that relationship and make sure that they will pay your realtor. Otherwise, you might have to pay out of pocket in order to be able to keep the realtor that you want to work with. Number two, disclosure packets. This is a very common thing in the area that when a seller is listing their home, that they make available any inspections. This could be a home inspection, it could be past inspections, it could be a termite inspection. It could just be things that they fill out, like transfer disclosure statement and other things that they have completed. But any information that they have available, they will potentially put together in a little packet, and your agent can call up and say, we want to take a look at the disclosure packet. And that can help you as a buyer to be able to understand the condition of the property, especially if it's a single family home, because there's so many things at a single family home that you may not be thinking about that are happening under the house and what the building looks like inside when you walk through and you say, oh my gosh, this is so beautiful. That doesn't necessarily reflect how old is the roof? How old is the plumbing? When was this house built? All of those things can factor in as far as the condition of the home and what you are ultimately liable for when things start breaking. Another thing that I hear very commonly with HOA dues is, oh my gosh, I hate these HOA dues. I shouldn't have to pay them or whatever. Let me tell you that even if you buy a single family home, you are going to have to be responsible and planning for your quote reserves to maintain the building, which is the money that is saved for future things. So we know that the roof will last for 20, 25 years. It is currently 10 years old. Are we going to have enough money 10, 15 years from now to be able to replace the roof? Oftentimes, I will hear people say, oh, well, because I'm not buying a condo and I don't have the HOA, I'm going to buy a single family home or I'm going to buy a duplex or whatever, then that means I can qualify for more money. Okay, no, that's not how it works because all the things that the HOA is paying for are things that you will still be required to have to deal with, even if you want a single family home. The difference is somebody else going to have the discipline of collecting that for you. So in an HOA, it can be sometimes a really nice transition, especially if you've been renting where like something breaks and you just call your landlord, to sort of transition into homeownership in a way where some of those things are actually covered by the homeowners association. And where if something breaks, then potentially, yeah, maybe it's your responsibility inside the unit, but if it's outside, the homeowners association can cover it. Also, it helps to get you a little bit cheaper of things on insurance and better rates around some of those things as well. So there's some real benefits to having a homeowners association. And just because you don't have a homeowners association does not mean that you could turn around and pay way more money for the house, because you are still going to have those expenses. You'll just have to save them yourself. Um,